Hello traders, yet again Victor with you from the Forex Board Trade Academy, and today we're having another idea, second idea for today, this time on the Australian versus New Zealand dollar. And as usual, before we start, I would like to remind you all the information in this video is for educational purpose only and should not be considered as a financial advice. This is kind of bonus idea. It has quite a nice probability in my opinion, and considering look at how many Australian dollar pairs we have and New Zealand dollar pairs, most of them actually New Zealand and Australian dollar. And this time we are adding to this portfolio, if I may say that, the Australian versus New Zealand dollar. Which means that for the short term, at least, I would expect Australian dollar to outperform the New Zealand dollar. The reason for that is basically what I see is this massive supply demand zone. You can see price rejected the resistance, rejected the support, and here it rejected the resistance at this support, sorry. At the same time, we see that the 200 exponential moving average was also rejected. Prior to that, price produced new higher high, which leads me to the conclusion that the pair will be going. But not only that, the decision making process is actually based on other pairs as well. So once you have the big picture, for example, that when you understand that it's Australian dollar that will be very strong, you can find much easier other trade ideas. And this is how I found this idea. Now, what seems to be happening is that price will produce one wave, must be pretty fast one, and the resistance is seen as 88.6% Fips. Many times I mentioned that the last wave at the tops or bottoms is very important, so I most of the time apply Fips to that. And the lowest Fibonacci retracement is actually 88.6. This is the reason I'm taking the lowest one, not only because it is the lowest, price might go back, but just to make sure that we will hit this level. Besides, we see the uptrend trend line, which corresponds to our target at 88.6, making it even stronger resistance level. In regards to the downside potential, I think this low shouldn't be broken, at least with no closing price below. There might be spikes on forward chart, but I would not expect any closing candles below that. If that will be the case, I think the idea can be invalidated because price might continue range trading. So for now, we need to watch this low because it seems like it's a very important price area and there's a very strong demand zone currently. And if it holds, price should be expected to move up. I would also like to do a quick run up through all previous ideas because we did it already today one more time. Australian Canadian moving towards the target, same Australian Japanese yen, same Australian Swiss franc, New Zealand Swiss franc as well, but it most likely will be moving slower than, for example, Australian Swiss franc because Australian should outperform New Zealand dollar. And this means that this short-term target is smaller than on the Australian Swiss franc. This is actually could be the reason. Australian versus euro, we can see that price starting to move down, and tomorrow I will do an idea on the analysis on this potential target. It's just rough target that I expect, but I will do it more precisely tomorrow. Euro New Zealand dollar, also it should be moving slower than, for example, Euro Australian dollar. As we can see, the target here is 440 pips, Euro Australian 500 pips. And this is basically a 50 pip move on the Euro Australian dollar. Let's see how much we have here. We have here 80 pips. Let's see how it goes. Now, next one, Euro Pound. The Euro Pound is currently at the point when we published the idea, is kind of started to move down and then return back, but let's see, it could be ranging. It's a lower priority idea along with the pound Swiss franc. So pound Swiss franc, that's what we expect. Trend line break and expecting the move to the upside. So far, also a low priority idea, and basically also because this is counter trend idea. We're going against the trend, which always is higher risk. That's it, guys. Thanks for watching. Likes, subscribe, comments, always appreciated a lot. Thank you, and we'll see you tomorrow.